Accounting and audit. So this is in Hong Kong. So this is one video that is part of a series of 5. If you don't watch, go back to the playlist and check the rest. Or if you're just interested in accounting, audit, tax, just stay on this one. So this will be a pretty simple one. So every year you need to do your accounting, get it audited, and fill in your tax return. Okay, so you will need a company or a person to be your tax representative in Hong Kong. So one of the questions sometimes is it mandatory to do your accounting? Yeah, it's mandatory to do your accounting. Yeah, but what about the audit? I was not profitable, or I didn't do much. Should I do an audit? I heard that under 2 million I don't have to do an audit. No, this is not true. Okay, so let me clarify here. Yes, you have to do your accounting all the time. If your business had 0 transaction, not a single dollar coming in or out of the bank account, then you can file a notice of non-commencement business. And at that moment, yes, you don't need to do the audit. But that means you didn't do anything with your business for this accounting period, So it's quite not smart to open a company, pay the fees, pay the maintenance, and you do nothing out of it. Now, let's say you do it. Yes, you can file this notice. Now, if you have done something with the company, then you need to do the audit. To do the audit, you need to have an accounting. Now, what is this thing about the $2 million, thing? Well, the thing is that if you make less than 2 million Hong Kong dollars, we are not talking in US, Hong Kong dollars a year, okay, in turnover, so in sales and revenue, call it as you want, then the IRD, the Inland Revenue Department, is not asking to put an audit report together with your tax return, okay? That doesn't mean you shouldn't do the audit. That just means you don't have to submit it. You just keep it in your office, okay? And you have to keep the audit and all the accounting document for a period of 7 years, okay? So if they decide to come back to you, if they want to control you, then they may ask for the audit, and then you have to present it. So that doesn't mean that under 2 million you don't have to do the audit. That just means that you don't have to send it together with your tax return. So don't get confused with that. About the accounting, also people will say, oh, but the accounting, we have to do it only after 18 months. So yes and no. So what's happening with the accounting is that you will receive your first tax return after 18 months since the incorporation of your company. And this leaves you the time to actually choose your fiscal year. So you can actually choose to have, let's say you open the company in November, and you would like to have a calendar fiscal year. So what you could do is the first tax return could be from November, let's say this year, November 2019, until December 2020. So that will be a year of 14 months, okay? And it falls within the 18 months, so it's totally possible to do it. Now imagine you open in March and you want, again, a calendar year. Then you have a short year, and that will be your first return, okay? So you will receive the return in 18 months, but that doesn't mean that you have to have that the first year is for sure 18 months. It just leaves you the time to choose your fiscal year, So the common one in Hong Kong will be the normal fiscal year, so April to March. The calendar year, January to December. You will have the school year, September to August. You have the mid-year, July to June. So these are the most common one. But if you want to have a year that starts on the 21st of March and stops on the 20th of March, this is your problem. You can do it, It's not really easy to keep track, but why not, So it's possible. So that's the 18 months rule. It just means that you will receive your tax return. So that means you have to fill in your first tax return after 18 months. Okay. Just a detail, if you want to work with ATHENASIA, we are also Xero certified advisor, so we can help you to have a nice accounting in the cloud. Yep. Now, talking about tax, because let's face it, many people look at Hong Kong also because of the tax, not only because it's a nice place, credible place, close to China with all the infrastructure you need, but also, there is some good advantage in terms of tax. So the tax on sales, VAT, it's 0% in Hong Kong. So we don't have VAT in Hong Kong. That doesn't mean that you never have to pay any VAT. That means that if your Hong Kong is based in Hong Kong, operating from Hong Kong, you don't have no VAT. But if you start selling goods, let's say in Amazon, Amazon is asking you to have a VAT number, so you will have to have a VAT number for your shop. So it's possible to operate with a Hong Kong company with a VAT number in Europe, for example, or several for that matter. If you're interested in this subject, stay tuned, because we'll have some interviews soon with some expert in VAT, and we'll be discussing this subject. So just subscribe to the channel if you're interested in that. Or if you are watching this video a few months from now, just check, maybe the video is already there. Corporate tax, 8.25% to 16.5%. So what is that? Well, we have two-tiered tax system in Hong Kong. So if you make less than 2 million Hong Kong dollars profit, so now I'm really emphasizing on the wording here, profit, not revenue, not turnover, but profit. So if you make less than 2 million Hong Kong dollars, it's quite a lot of money actually. If you look at it, in euro, it will be 220,000 euros, something like that, with the rate of today. US will be, I don't know exactly, like 250, something like that, I guess. A bit more. So you will pay 8.25% on these first 2 million honkies. After, anything on top will be taxed at 6.5%. So it's pretty sweet to pay your tax here. 8.25 is a good rate, I think. Plus, there is no tax on dividends. So this is all you pay. After that, you can get the money out. There is 0% tax on the dividend in Hong Kong. Now, if you are operating, if you as shareholder of the company, you live in another country that tax dividends from foreign sources, then you will still have to pay dividend tax in your country, but not in Hong Kong. Okay, this you better see with an international tax advisor that knows your reality, that knows your jurisdiction. Now, if you are a Hong Kong resident, there is another tax that is interesting to discuss, is the individual tax. Basically, your salary or director fees. So these you have 15% maximum. Okay, but to reach 15%, you have to give yourself a lot of salary, because on the first 132,000 Hong Kong dollars, you have no tax at all. Okay, 0%. Then on the next 50,000, 2%. The next 50,000, 6%. The next 50, 10%. Next 50, 14%. And the rest will be 17%. Okay. So what people normally do, they will give themselves, so if they make really a lot of money, they will give themselves around 332,000 Hong Kong dollars a year. So that will be about 4.82%. Because as you can see, 14% is less than 16.5. Okay, so it's better to take it in salary than take it in dividend. But this is if you make really a lot of money, because remember, if you make less than 2 million, you pay 8.25. Okay, so let's say you want to give yourself everything under 8.25. So you will only go until 6%, because if you give yourself another 50, it will be 10% tax on these 50, which is higher than 8.25. So if you really want to go the minimum and optimize to the max, you give yourself only 232,000 honkies a year, and then on this amount you will only pay 1.72%. If you have a spouse that doesn't work, if you have kids, if you have elderlies in Hong Kong that you are taking care of, etc., there will be also other tax break, but I won't go into the details because it's not the topic of today. But there is really an interest in considering the individual tax if you are an entrepreneur based in Hong Kong as well. Okay, because anything under 8.25 is better to take it as a salary than as dividend. Another thing also on the tax that I didn't mention yet, Hong Kong has a lot of possible deductions. So you can deduct a lot of things on the business, which sometimes would not be possible in other jurisdictions. But in Hong Kong, it's pretty open on the deductions. So, and this is basically anything you can deduct on the company is a 0% tax, because it's reducing the profit on which you will pay no tax. And this is something that is good to know. If you want to work with ATHENASIA, will help you to see how to optimize all these numbers. So that's it for this video, but as I said, it's a series of 5, so there's still one more to go, the offshore tax exemption. If you are based in Hong Kong, you can watch it for the fun, but it's not for you. If you're outside Hong Kong, just keep going and have a look at that one, and you may learn one thing or two. Thanks for watching. If you enjoyed this video, you should definitely check this video as well. And also, don't forget to put a thumbs up, subscribe to the channel, and ring the bell. And if you have any question, don't hesitate to send us an email at info@athenasia.com. And I see you in the next video.